Hey everybody, it's Patrick with P-Dub's Crypto World again. Today is going to be kind of a twofer. So, after making a video earlier, it's a little lengthy. Hopefully you watched it because I think there is some useful information in there, or honestly, I wouldn't have made it. By now you probably all figured out, I generally send out videos when I've got time or when I've got something to say. I don't like to do a bunch of fluff. I like to offer useful content. Obviously useful to me, hopefully useful to you. And today's video I did earlier had to do with a trading strategy that involved your daily gains. So for those of you that didn't see it, I'm making buys using my large account, well, not my large account, but my total account, and then pulling out. So here, after a conversation with one of my, I guess you would call them just users in the Discord channel, MC Hammer, or Hammer anyway. So after a conversation with him, I wanted to put this out there and elaborate, because the last couple days I was using the strategy and it worked super well. You know, the whole point of making these buys is to get in, get your profit, and get out. So, as you see, everything's red here, and then some green. And the green is stuff that's going to be at a higher point. So, the question that he's coming to, and this is going to be open interpretation for everybody. I invite you to the Discord channel to partake in these conversations. So, obviously, his discussion had to do with your buying strategies, buying and selling strategies, and the times in which you're doing it. So they've got add-ons like PT Feeder out there, or PT Magic, in which they can change your your strategy based on what the market is. Now, the problem is with any kind of a market, you don't know what it is until you're in it. So you're always speculating whether or not it's going to be a bear market or a bull market. And you don't see that from the offset. And the problem is, it's great that you can identify what is a bear market and what is a bull market. And sometimes there are indicators, false indicators as well, that can tell you exactly what is what. But the problem is, there is not very much that is saying the bulls are coming or the bears are coming. It's all speculation. You'll be right sometimes, you'll be wrong sometimes. Now, the problem is, trading in a bull market is completely different from trading in a bear market. And the follow into, well, not follow, but what leads into each one of those is a drastic change. Now, a bull market obviously means that your Bitcoin price is going to be going up. A bear market means that you're going to be selling off. And the problem is, with altcoins and the trading that we do, bull or bear, it doesn't really matter. Bitcoin's price affects altcoins in total. So when Bitcoin goes up, all the coins generally take a little dive. And it's the wave pattern in these buys that we're looking to capitalize on. We already started at a disadvantage because generally we are going to be buying coins when they are down at the troughs. We don't buy coins when they're at overpriced values, and we don't buy coins when they're positive, hoping to sell them when they're negative, because, well, that would be simple. Well, no, I take that back. That's not simple, because, you know, that's pretty much short selling. But when you look at a down pattern here, you can see it coming down all this time, and then you still got trending here. This is SOL, for instance. We started at a disadvantage because we want to be buying it on the down, hoping that we got it at its lowest peak. You know, the RSI indicator. I like the RSI. People use the MACD, people use Bollinger Bands, EMA. And using these kind of things, we are already at a disadvantage. We're purchasing these when they're at a loss and hoping to sell them at a gain. The problem is, our buy strategy is meant to catch it at its loss. But what do you do when the market changes from a bull market to a bear market, or just the standard wave pattern where there are ups and downs but across the board? Like this right here is a good pattern that I like to see when I trade, because I have an expectation of the ebbs and the flows and what my wave is going to look like. So I'm pretty sure that if I'm buying here, there's a good chance that it's going to get up here. I'm going to sell, and if I buy down here again, it's going to be, and like that. And you see a lot of correlation with this kind of thing due to the RSI. That's why I like the RSI, is because generally the RSI is going to have a correlation between the wave pattern of your actual RSI, the volume, and what people are doing buying and selling as to the price of your coin. So the correlation that you use there is fine. So one of the big things is when you find that you're in a bear market, which currently when you're looking at negative, all of that stuff, and this got down to below 31,000 or right around 31,000, and it's been creeping up between 31 and 33. And if you think about when Bitcoin was below 20,000, those were huge moves. This is a negative 15%. You know, that's a big move. So that indicates to us that we're in a bear market. But the problem is, yesterday, or even, yesterday it was trading like a normal market, not like a bear market, even though our value was down from 42 hitting to the 35, 36, and even down to 34,000, in which it popped down earlier today. So when you have false positives, when it's behaving a certain way, when you're in a specific kind of market, you had coins that were hitting some pretty good highs, and you're starting to see them come down a little bit, and you start to see some of these actual coins come down significantly. The reason why I want to point this out is because the strategy which I was indicating, I made a buy here for my market coin, and it's dropped. So I'm full in here. Now, I'm still ahead what I was lost before. So I've made value using this in the last couple days because the amount of trades that I made. But the key point that I want to make is that when you start looking at, let's go look at my sales log, and I can indicate when this particular one was trading and when it happened. So I started right here using this. So we can see my value here was at 201 according to the current point, 230, so 0.0060, and you can see it slowly, steadily increasing here, and these combine. And then I had one that sold off here combined, and you can see the value of these creeping up to the point where I was at my last previous current value of approximately $240. So now where you look at me, and I'm at this point where I am a total of $229, you can see that my value is still crept up $29 over the day and a half. So I could feasibly sell this coin off at this point and take the loss and still be ahead more than 1% from my day. So the problem is that, I got greedy. So if your goal is to make 1% a day, stick with your 1% a day. And if you're doing it this way, in which you have a large buy, I would call it, but this is small potatoes compared to some people. So if you have a large buy and you're doing your full account, like for smaller accounts like this, be content with your 1% a day. Because right now I'm negative 455, and I could short sell this just to keep pertaining to my profits, but I'm confident in a market recovery for this particular coin at this loss. It was trading at excessive gains in the last couple days, and I think that if it starts hitting 33.5, 34,000, then I'm going to see a return of price in this. So when Bitcoin made its move down and starts to stabilize a little, then we'll start seeing the altcoin price come back. Now, this is a coin that I bought in my last video, Pivx. I bought it on market price instead of an IOC, and I pretty much was almost in 1% whole from the get-go. It came up a little price and got to where I was in like very minimal profit, like 0.10. So I was confident in its ability to come back as a down coin. Clearly, the market changed on me at that point, and I'm stuck in this for a big bag. So we look here, and I'm currently $43 down. It got as much to $63 down. It was at negative 12%. I'm still confident that this Pivx coin has the potential to recover because I did buy it at a good loss in the market. So when the market takes an entire change, you have to hope, and has to hope that you're going to meet your expectation to recover the loss, or at least a portion of it to not take such a big hit. I could have sold this out at a 5% loss, but I did not want to do that because I did not want to give results of the coin that I purchased during my last video. I believe in full transparency, so I'm not going to tell you something's going to work and then when it doesn't work, I'm the first guy to say, oh, well, it works, and then not show you that it actually works. So you can see the results that I had prior to this is that I had it working successfully for me, and then that comes to the point of this particular video is do not overstay in the market. The market, unless you are a ninja in this thing, is gambling. You're gambling. You're making educated guesses. It's a strategic game of gambling, and the house has the favor. So we see here in this particular where I started doing this at around, I think I only started doing 4 of these particular manual buys, but I started making my first one around here. So I was there, and then as other coins sold off, I incorporated them into my balance and began buying larger and larger. So that's why I have $450 starting out here, I'm guessing. So if you overstay in the market, the biggest problem that you can do is over trading. I made those trades in the last day or two, and the value of those things when I traded were easily over my 1% increase on the day. It's not that I'm a greedy person, it's that I feel the strategy works. And like every single strategy, talking to Casey, Hammer, many of the other guys, anytime that you run a strategy, it works until it doesn't. And the reason why it doesn't is because the market is going to change, and we don't know exactly what that change is going to entail. Obviously, we'll go from a bear to a bull market, or to they pretty much say that it's a bear or a bull market. Then you've got the in-between gray area that is the wave pattern that I like to trade in. So the ebbs and flows of that are not necessarily indicative of a bear or a bull market, and that's great for trading altcoins. That's your wheelhouse. But when you do not know which way it's going, if you are over trading, you are eventually going to be caught in a position where it changes from one market to another. Trading in the gray area is great, but the moment that you go to a bull market, you need to understand that you can almost buy anything and it's going to sell off. When you're in a bear market, you have to be much more strategic, which is why you have to use strategies that focus on buying in a bear market. So when you are actually taking those things into consideration, the biggest thing you have to understand is don't get caught. And in this particular strategy, I did get caught because I was over trading. I was going from one position to another instead of saying, this is what I want to get for my day. Set yourself a goal for the day. If it's 1%, then stick with your 1%. When you get your 1%, get out of the market, because you are going to get caught in a coin. You are going to get caught in a market change, and you are going to be stuck in a bag. And there are strategies out there like the dilution strategy that will help you get out of a bag. But the absolute problem is that you will constantly get stuck in bags. There are no ways around it. And the easiest way to stop from getting stuck in a bag is by having good buys, by using the proper strategies during those periods. Buying in a bear market, you want to use a specific buying method, indicators that you're looking at, and the same thing for a bull market. I can't tell you what those are because I don't know. I try different things out. I'm more a strategy guy than an indicator guy. There are guys out there that are phenomenally much better and can explain those to you. I'm not that guy. But what I do know is that when you're looking at changing between markets, you're not always going to know. And if you are in coins when that market changes and you don't get out of them short selling, which nobody wants to short sell, the people that use profit loss, they are the guys that are constantly benefiting from market changes, from bull to bear, bear to bull, and the ebb and flow of the gray market is what I consider it. So if you look at that and you make good determinations, only trade when you need to trade. Don't be greedy. Give yourself a goal, give yourself a timeline, and you are much more likely to hit that. If you're trying to go from a $200 account to a $1 million account in a year and a half, by using compounded interest, looking at 1% a day, then stick with your 1% a day. Don't say that, man, if I make my 1% every trade or every few trades, then if I do that 4 to 5 times in a day, then chances are I'm going to hit it in a couple of months. Well, that's not going to work out for you. The market's going to change multiple times and you're going to get stuck in it. So set yourself a goal, stick to your goal. If you're going to trade beyond your goal, trade much more cautiously, because these were 2 good buys in my opinion. They fit my criteria, and then the market turned when I was buying a coin that was already on its low end. And now we'll just have to watch the market recover a little. I do like that it's came back from 12.5% back to 8 in the third, but I'm still going to wait for it to recover more and then go that route. I may wait till it gets to a certain point, and if I don't see progress, short sell it off, take the loss, and then move on, because it'll still be a good market, and maybe Pivx coin isn't going to be something that's going to move that way back up. I have confidence that it will regain that price because of what I bought it at, but again, I don't know. I don't know if the market's going to change again. Bitcoin's erratic right now from the 31 to 36,000 to 38,000 mark. And we're seeing a lot of big moves. And a lot of big moves means that these altcoins are going to fluctuate high and low. It's great for buying, don't get me wrong, but don't overbuy and don't get stuck. So hopefully some of this information is very useful to you. I generally... The house always wins. The only way you beat the house is if you get up from the table when you're ahead. Set yourself a target. Hit your target and quit over trading, because eventually you are going to lose. You're going to lose some, or you're going to lose it all. One way or another, you're going to get stuck in something, hand in the cookie jar, whatever cliche you want to give it. But go ahead and make your trades, get out of the market, and let the market do what it's going to do. You are much less likely, not completely unlikely, but much less likely to get stuck into a trading coin when you only trade 1 to 2 coins that you find good setups and good positions and good opportunities, and execute on those. Much less likely to get stuck in coins if you're picking 2 coins at random points during the day. Law of averages, which is or is not a good or absolute thing, is going to work in cohesion with Murphy's Law. Just don't let Murphy catch you with your hand in the cookie jar. Alright, so again, sorry for the length of the video, but I had a lot that I wanted to say, and I had a lot that I wanted to get across to you, and hopefully you found use in this video. Come join the Discord, start up the conversation. We got some people in there who are actually doing pretty decent, some people not doing quite as well, and if you're doing well, don't use that as a reason not to join the Discord and share your information. There are people that could learn from the things you're doing, or can learn from the things that you're doing that are not working out for them, and we can build the community together to help everybody achieve. Because to be honest, if you make profit, that's good for everybody. If you take losses, that's also not so good for everybody, because the whole point is we want to keep churning as much Bitcoin through as we can, because the more traffic we have is the more accepted this is, and the better position that we are as a whole putting cryptocurrency for the future by showing the amount of volume that it has, the value that we can drive it through, and the amount of churn that we can do. Average daily volume counts a lot when you're looking at a commodity and its value. So hopefully you found the value. Thank you again. If you haven't, like the video, subscribe, and when I find something else useful, then I'm going to help put it out to you. I can't say that I'll do that in a week or 2 weeks or whatever the case would be, but hopefully you find value in it. Thank you very much for your time.